Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We're taking a look at the equity markets as we kick off the morning. And there's two events that are happening this week, and I mentioned a couple of times the major event will be tomorrow's FOMC. So despite the fact that we're seeing a lot of strength, I just want to kind of go back to something that for those of you that are probably pretty frequent Charts and Coffee viewers, you know that I'm going to go back. I'm going to talk about the last 3 to 6 months. I'm going to talk about the year and say, look, the overall direction of the equity markets has been up. There's nothing really to say about that. I've been looking at a lot of analysis out there and headlines and content, and it's amazing just how bearish traders continue to be. Forget even going into this week, but in general. And I just want to emphasize, and this is what I was mentioning to my members in the Sector Secrets Mastery. We're long, by the way. Okay, Rog, we hear what you're saying, but what do you got? Those are our open positions, right? We send these out every single evening, sometime after the bell. And I tell traders, remind them what we're in, where we're in from, and where we've scaled out of. And this morning, we're going to be looking at another scale in a couple of these, most definitely Wells Fargo. The Dow, last time I checked, futures were up 1,200 points. The number one weighted sector in the Dow are financials, and the best looking stock in financials is Wells Fargo. That's why we have this position. So we went in long, not long because there was an assumption about the election result. Not long because we're assuming that Powell's going to sound dovish. Long because those are where the trends are, and these trends happen to have pulled back. That's really it. All right. So it's not about guessing, oh, I woulda, shoulda, coulda got long the NASDAQ or the S&P or the Dow. Please don't do that to yourself. No one can see the future, including me. Although I will say, so many analysts can see the future. Clearly, everyone in television can see the future too. But us mortals, trading from their home office, as I've done my entire career, at the end of the day, the rest of us follow trends, follow volume, and follow price. And that's why there was zero reason to be bearish. Plenty of reason to be maybe just flat and say, you know what? I don't need to deal with the melee, the aftermath of whatever happens because I can't see the future. Or more so than that, how difficult would it be to be an SPY puts this morning? And, it's very difficult to manage risk. So that's really the overarching conversation. Can we manage risk? All right. So this is what we've got this morning. We've been following the trends, and even more so than following the trends, we've been following the trends at the index sector and individual stock level. You'll notice that all my positions are individual stocks, which either at one point or currently are the relative outperformers in the broader averages. All right. So again, we have to normalize talking about the positions we have open, right? Not analysis. Anyone could analyze the market. Anyone could say coulda, shoulda, and this is what looks good. We want to talk about positions, right? So I hope that's what you get from the show. These are the things we're doing in the Mastery. Mastery members are going to, by and large, wake up to these long positions, right? None of this were things we did last night. None of this was overnight trading. None of this was, betting on a certain result. It was just sticking with continuation of the trend. I hope that resonates because it's working, right? All right. So one of the things that I would also say, and it definitely caught my attention this morning, and yeah, Jas, was gold. Am I going to do anything with gold today? No, you know what? We did do some things with gold earlier, and I'll tell you exactly what happened. So when we have positions on, one of the things that I teach, it's really the cornerstone of a lot of what we do. And that is we have a process to have a formula for getting in a position. How many contracts do we buy? Where the first target is. And when that first target is reached, we move to a break even, right? And that's what we do in the rooms. And I think a lot of folks have been seeing what we're doing in the mastery and say, gosh, Rob, what you're doing in the sector sequence mastery really makes sense. And let's start using things like tighten stops and break even stops. And let's have a formulaic approach to position sizing. And I hope that's something everyone's embracing. On Friday, this is, I'll actually copy and paste exactly what Friday's recap to members was, because I think it's pertinent, right? All right, this was Friday's recap to members right here. So right there, Friday, November 1, and you'll see I had Cisco and Disney open. We ended up opening Wells Fargo this week, and I ended up closing at gold. Now, I ended up closing at gold at the break even because we hit the optional target. Some of our traders took some profits, and then when the break even got hit, gold was closed. We took some great 251 calls that we got trailing stopped out of. So hit first and second targets, got trailed out at the first target. And then we took another entry in gold with the 253 calls and got to the optional. I tightened the stop and then I got stopped out. So I'm flat as a pancake in gold. Do I want to do anything here? Let's talk about why I color code everything. And hopefully this will resonate. And you can think about the filters that you might have in your own set of indicators. And, if you don't, maybe consider what we're using in the mastery. The red candle, this is the top tier layout that I'm using. The red candle means not just bearishness, but bearish participation. And for swing trades, my rule is I cannot buy a red candle. That door for long calls, and I'm not long puts. I'm not going to be buying puts into a big down move. My ability to buy puts is invalid because we have an uptrend on GC, but I'm already stopped out. And with that red candle, there's nothing I can do. And so I'm going to just leave it alone. There's nothing to do with gold right now. Gold had a great run for the better part of 2 months. And then now that run seems to be, at least for the near term, it's over, right? And by the way, if you've been watching the free videos that I've been sharing, and if you've been in the show, watching the show here for, however long, you know that a lot of our strength has been in places like financials. Financials have been very, very strong. So rather than sticking with things that I like or sticking with things that recently made me money, everything on our watch list has to earn its way there. It's to fight its way onto that list, meaning it's got to look better than other things. That the sector that makes it onto our watch list looks better than most other sectors. The stock within that sector that makes it onto the watch list, like WFC, has to fight to earn its spot on that list. And if you think about it in that way, right, then you realize that you're always going to be optimizing for trends and you're going to always be optimizing for relative performance. And so if we continue to do that, gold just can't be on that list, right? It doesn't have relative performance. And that red candle means that's it. We'll wait, maybe later, but this is not a tradable move by my rules. Now, that's on the daily time frame. Who knows? There might be something I might do in a 1 hour or a 5 minute. Those are completely different setups. Those are completely different structures. So we might play the short side today as a day trade or whatever. But right now, I'll likely leave gold alone. All right. So no, I will wait. And it's not even a minor low I'm waiting for, Jazz. I'm going to wait for the red candles to turn at least to yellow. All right. Next up is SOFI. All right, SOFI. This is going to open at 12. The pullback would probably be closer to 10. But Robert, what I would do with something like SOFI, and I'm not in it, and frankly, I don't plan to be in it because nothing wrong. It's not that there's anything wrong with SOFI. I typically don't trade stocks under $20. That's just not my thing. But if you are, keep an eye on volume ledges. And a really interesting volume ledge for this quarter is right there around 10. You see that there? Right there around 10. Okay. Very cool. Thank you for the question. And yeah, look, can you play under $20 stocks? Can you play under 10? I would say, obviously focus on structure, and this one's bullish. So beautiful. You're finding a trend, you're following it. I love it. Ultimately, the main thing to do here would be say, where is the size going to help me out? Where am I not going to be alone in my buy? Right? We don't need any kind of I'm the first one to plant the flag here kind of thinking. That's not trading. Trading really is surfing the wave. Surfing the wave means the ocean's going to do what the ocean's going to do. So my job, and this is what we've talked about in the Mastery forever. I used to I had senioritis. I used to skip class in senior year, and we go surfing up in Sebastian. I live in Florida. And what do? You paddle out and you wait, and you talk to your friends, and you wait some more. And then you see a swell. You think, oh, that could be one. The angle's right, height's right, and you start paddling towards it. The ocean's going to do what the ocean's going to do. I'm not affecting the wave at all, right? It's only my job to be in the right place at the right time. And that's the analogy that we use in the Mastery time and time again. All right. So let's, yeah, thanks for the question in terms of, whether or not there's something to do in gold or even this SOFI. That's the way that I would look at it. All right. Let's see. Question here. Not even question. Trader Gene, do you have a point? I'm looking at your comments. I'm reading them. Is there a point? I've made 2 wrong assumptions in my class. Look, gang, I'm going to end up with, I don't mind to talk about this stuff up front, but I don't know what that is. Gene, here's what I can tell you. And unlike really anybody else, and even unlike you, my trades are public. I'm sharing what I'm doing every single day. So you can troll me all you want. That's fine. I don't know who you are. You can tell me what your real name is. And if you took one of my classes and you're unhappy, you have plenty of time to express your opinion about it. But ultimately, I've been doing the same thing for 30 years. Find the trend, buy the dip. Doesn't matter if it's intraday, doesn't matter if it's end of day. I'm never going to say I'm going to catch every move. In fact, I spend a lot of time saying not every move is one that we can catch. But we've been doing well. We've been sticking with the long side, and it's been working. All right. So, ultimately, using volatility, right? I've been using it a lot. And if you don't like it, guess what, Gene? Don't use it. But it's been working really, really well. And I don't look at 1 or 2 examples, right? And I don't, again, I don't look at 1 or 2 examples, and you're in the public chat there. That's fine. I look back on consistency, right? I look back on the last 6 months, the last year. And anyone who has the indicators will see they work more often than not. Nothing works all the time. All right. So that's it. I appreciate your thoughts, I guess, or not. So thank you. But look, this is my job. This is how I do it. I stay true to what I have tested for many decades now. All right. Okay. So moving on. Next up, any thoughts on PayPal, Jay? Yeah. So despite some people disagreeing with the effectiveness of my trading, we had a winner in PayPal. It was pretty good. Do I want to get into it now? I actually don't, right? For the same reason that when I'm prioritizing trends, here's my problem with PayPal. It's transitioned out, right? It's transitioned out. So what I have is a trend that you can see here that started in August. We got it. I didn't get into a lot. I mean, this was something that probably ended up on my radar a little too late, but we still got a win out of it. And that's all that matters, right? I got an at bat. We got on base, and that's the job. But right now, I can't say I would focus on it because it's going to open up at $81.50, right? I need to get the green candles back. I would prefer to see the trend come back. It's not a no, right? It's not a no, Jay. So ultimately, if I can keep with the yellow candles and we can start to punch up to some higher highs and higher lows, preferably green, so I can see the bullish participation and the strength, maybe then, but for now, it's got to sit on the back burner because when I compare what I want to trade, it's got to look more like wealth. It's got to look more like things that are still in trends, not printing red candles, and preferably as consistently green as possible, right? Okay. So next up is what else we have here. All right. B. Jones. All right, let's see. I appreciate you sharing your knowledge. I'm tuned in every day. I appreciate that. I appreciate that. Italo, yeah. Yeah, so, on the flip side of, hey, look, I'll give everyone a minute, right? I'll give everyone a minute. Um, oh my gosh. All right, next up is, no, I appreciate that. I appreciate that. There's always another trade. Yeah, and I think that kind of goes back to the first question or the first comment this morning from Unit 1. I think a lot of folks are feeling that way. And believe me, we always think our our winning positions are too small and our losing positions are too big. But at the end of the day, I do like the sentiment. There's always another bus coming. If the trends are healthy, and I think a lot of these are, the healthy trends correct. So today's move, well, it looks really exciting, and it's going to be kind of cool to see, maybe a 6-point, 7-point gap in a long position that we have on Wells. That's great. There'll be another trade. There absolutely will be another trade. Yeah. All right. So next up is Chris. Yeah, thanks, Kay. I'll give you all as I continue to be peppered with. Yeah, say exactly. Why are you here? Okay. So what we want to do, honestly, then is focus on the long side. All right. Focus on the long side. And ultimately, let's go back to, oh my gosh, I can hardly find the questions in this slew of just, all right, let's see. Hang on, I'm trying to get to the questions here. All right, Michael, here we go. Starting my full third month in the mastery and have significant account growth and have easily paid my yearly subscription. No, I appreciate that. To everyone who's watching, Michael, I think what the coolest thing is we just did a trial, a month ago, 2 months ago now. And yeah, the whole point is once you enter the room, you get my indicators. There's a number of indicators, my classic tops that everyone has. So at least we're starting with a baseline of the kind of analysis I like to do, which is trend following. Pure and simple. It's trend following. That's what I do. And then after that, if you choose to say, hey, you know what? I like the trades. I like the style. Great. But the idea, gang, and I don't care if it's my room or anywhere else, follow the trends, right? Follow the trends. And ultimately, the best thing we can do right now is when we are following the trends. And I think we talk about this when we're doing our Tuesday free videos. And I actually need my Firefox open right now. Hang on. If you have a moment, go to Koyfin, KOYFIN.com. Let me bring that up. KOYFIN.com. I love this service. It's a free version of it. And what you want to do is take a look at the month to date. It's not as if November wasn't already setting up with a lot of performance, very few sectors month to date. And this doesn't include the 6th. So this is yesterday. Look at how few sectors were actually negative. This is broad-based participation, right? This is absolutely broad-based participation. And ultimately, what we want to do is focus on the fact that if we have this many sectors that are weighted in the broader averages, weighted in the NASDAQ, the S&P, the Dow, even the Russell with KRE, it's hard to be a bear. And that's kind of what we've been saying for weeks now. WFC says, thank you. My question is, How do you see the election results affecting the market over the next few weeks? I'll just follow the trends. I'll just follow the trends, WC. That's it, right? I'll just continue to say what has outperformance, right? Where are the trends? And I'll wait for the dips. Tomorrow we have a major event, the big event for the week, as far as I'm concerned, because it's the monetary policy. It's the macroeconomic angle of, do we continue to see lower, right? Do we continue to see lower rates going forward, right? And if we continue to see lower rates going forward, think about what that does to lending, borrowing. Equities love cheap money. And I would continue to be a bull, although that's really not that different than what we've been talking about all year. All right. Okay, gang, as always, thank you so much. Thank you so much for being here. Well, most of you anyway. I think most of you that are on YouTube can see. I'm trying to find the questions, but someone clearly doesn't want me to be able to see them. So, but anyways, I think I got to all of them. Sorry if I missed any questions. A lot of chaff I've got to wade through here this morning, but I appreciate the time, gang. I'll see you tomorrow. Be good to each other. Stick with the trends. And until then.